Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening, as we're here now on Wednesday, the 4th of October, 2023, just after 5:30 a.m. Central Time. Well, the gold market's stuck in the 1840 area. That's the way to look at it. Silver market toying with getting under the $21 zone. You're now under the 360 level here in the copper, and platinum has gotten itself hit. The dollar, stable. Yes, it was down 19 points, but given how much it's made, giving back 19 points doesn't really mean all that much to me. And the big break happened in energies, down over 5% today in crude. So what happened? I was watching Cramer at the end of the day, and he's going, oh, it's lack of demand. No, it isn't, Cramer. Got it wrong. What it was today was people were listening to what I think I was saying. And I said that if you read the numbers in a story that got literally no real publicity, the word is that both Russia and the Saudis were pumping an additional 800,000 barrels a day in September. Now, if that's the case, the headline was, oh, we've got 1 million barrels a day cut out of the Saudis. We have 300,000 barrels a day cut out of Russia. Well, Russia produced that 300,000, according to the article, and another 500,000 to 600,000 coming out of the Saudis. You offset that. Market suddenly looks at it and goes, can they be trusted? That's what I think happened, and the market went down. I mean, yes, you can argue interest rates up, but suddenly people aren't driving, and that was what Cramer was saying. No, Cramer, people don't drive at this time of the year. The summer's over, all right? They're getting ready for the heating oil season and the colder weather. That's what they're doing. The driving ends naturally. It doesn't have anything to do with the other. I hate to tell them that, but it's the way it is. All right. So what do you do with these markets? Well, I'll tell you, I spent time today and I did a special report, one I've never done. Instead of looking at individual charts, I went to the seasonals, just the seasonals, in the Dow, the Russell, the NASDAQ, and the S&P. And I looked at them on a day-by-day basis right from now, literally right now, as to what the 15, the 30, and the 5 years have done on a seasonal basis, looking at it day by day. At the end of this report, I'll review that with you, okay? All right, so here we are in the gold, still cratering. Got under that 18-week average, stayed under it. Interest rates, I have been saying, not yesterday, not the day before, for a long time. Higher interest rates and a higher dollar are the enemy of gold, and gold falls on that news. And you've gotten as low as the 1818 level. Are we going to crack that? Are we going back into this zone? If you'll recall me also saying, I was surprised that we weren't down here a long time ago. And the reason is those two enemies. There is the inflation battle going on. And I know people looked at it and they said, well, look at the energy prices go up. That's part. But then you look at the headline inflation numbers, they're down. And we got sticky in the core inflation, but it's still way down from where it was. That's the important thing. So I don't see that argument in gold. I can see gold's argument in times of real duress where you don't want to own a currency, but why own that? Why not own them Bitcoin and other things like that? When you look at the gold market on a daily chart, I mean, this is a market that just literally fell apart. We get breaks like this from time to time. Notice they're not rallies like this. We're getting breaks like this time to time. First from the 2000 level, then to the 1900 level, now to the 18 is the next level, the 17. You have to ask yourself until you get through layers where you made a top, like you did here and here. So all of you that are trying to buy the gold, I'd rather be late to the party. That's what I'm saying. On the swing line, you have lower highs, you have a lower low. We don't know what this is yet. We had today an inside day, didn't tell us very much. The market is under the 18-day average, and I pointed out to you this week that you had a crossover recently where the 100 got under the 200, a classic bearish setup for those of you that learn and study moving averages, and the market plunged on that news. Now, the market also did something, it's rare. You had 1, 2, 3, 4, 5, 6 days in a row where gold was underneath the lower Bollinger Band. That is unbelievably rare. Go on a lead contract month and find it in futures. If you can find it in the course of a year, through all the commodities, 4 or 5 of them, you're lucky. It's a sign of weakness, not strength. Number 2, inevitably you move to the right-hand side of the band, which you did today, and that's where you're at this point in time. Got it? This is a massive washout is when this occurs. More times than not, it'll do this. And you can see that in different areas. I'll point them out. You got that? That's the typical. This is unusual in the marketplace. All right. Are you embedded? Oh, yeah. So until the red line's back over 21, I want no part of even thinking the long side. I'm only thinking, do I get a big enough rally to sell it? And if it loses the embedded reading, we've ended that phase of the bearishness. I want to be with the trend of the market. I know you want to catch the turn in the market. I'm not interested in that. In the gold-silver ratio, continues to break out to the upside, back to 86. Certainly not friendly in that market. And in the silver, we had 3 days in a row under the band. We're moving to the right-hand side. Are you going to embed? Takes 3 days underneath 20 to embed. Can't count today. We don't know where it's going to finish. Day 1 was Wednesday. Day 2 was Tuesday. Let me come back here. And that's my Monday wasn't one of those days. So you need tomorrow. We'll see if it ends up embedding. If it does, it's the all green sign that on big rallies, you're looking to be short until the red line closes back over 21. You need not do it, but that's what I teach in my courses. In the copper market, higher high, lower low, and as you can see, the market oversold. No, I'm not interested in that. Yes, it's working its way lower with metals in general, but it's not embedded. You don't always have to embed, but being oversold, one of the things that I've learned a long time ago is when you're oversold, one of the things you do is you don't deploy new money. Embedded, yes. Regular, yes, where you're not oversold. Oversold's very difficult to deploy new money to the short side. In the platinum, you've grabbed hold of the Bollinger Band, you're hugging it, you're beginning the process of embedding, you're not there. GM has asked for, I think they just got from their lenders credit lines of another $6 billion. Do you think they're using that money to just earn interest? I don't. It's credit lines. What they're saying is if this is going to be a long, drawn-out affair with the UAW, so be it. Now, the UAW did say that they would lower their wage demand to 30%. I read that today. I obviously don't have a personal call into Mr. Fain, but that's what was in the news. So that's different than the 40%. That's a move in the right direction, and that might be doable over a 4-year contract or a 3-year contract, whatever they end up getting. But it is not going to be doable with pension plans being added. It's not going to be doable with paying for a 40-hour work week and somebody works for 32 and a half hours. And I seriously doubt if I'm the CEO of any of these auto companies that I'm going to agree to diddly on a power plant where I'm building my batteries until the darn thing is built. Do I see if I have anything profitable? And I'm committing to that. That is not going to fly. I would give you the commitment. We will talk about it once the plants are up and going 3 years from now, and we have something to talk about. But the contract's going to be over. You get that anyways. Got it? So there's certain parts in this moving target you got to play with. Last, in the dollar index, until you lose the embedded reading, pullbacks on the break, I think, are going to get bought, looking for the market to challenge the Bollinger again. Eventually, that won't work. Eventually, the market will see a settlement under 79, and the game, for the moment, will have stalled out. That's the way I look at it. Now, as you heard me talk, I did something different. I've not done a report the way that I just did this one. And this one is the special report on stock indices. Forget these type of looking charts. Got it? I went purely to the seasonals, the 15, the 30, and the 5-year. I could say the 30, the 15, and the 5 be better. Just that. I didn't do price counts. Not interested in them right now. I talked about world events. Talked about trading sensitive information right now. I think it's important. How do you get this? It's so darn simple, my friends. It's on our website. All you need to do is go into our research area. Got it? It's under research. IraEpstein.com, under the word research. That's where you go. You can also move your cursor right to the top up here. It'll take you into it that way. Now, my reports are only up 3 business days. They're not history lessons. They're meant for right now. If you looked at my last report in stock indices, I got an A+. Will I fail this time or not? That's going to be the interesting question. I carry it from now into the late November period. And then we talk a little bit about, Santa Claus. You have yourself a great day. Take a look at the report, and I'll see you all tomorrow.